Hello everybody, welcome to another update on the Gold Forecaster Index. On this screen you can see that gold is plunging, and that's because we just got a very nice jobs report with a lot of manufacturing jobs gained. I'm not so sure if this is real data, but that's apparently what is happening. Now in the previous video I told everyone to buy gold. That's when you had bought here, then gold has been moving up here. So that was a very nice way to buy gold. We have here a technical correction, and we will probably see gold moving higher into next year. Silver has been flatlined apparently, and is also plunging due to the good jobs report of today. Now, what does the gold forecaster index say? We have a new data point here. Uh, this red line here is telling us that we need to buy gold because we are very high here, the gold forecaster index pointing upwards. So probably we will see gold going higher into next year. I've also added a third chart here because the trade data is typically delayed. So I have removed that here in the last chart. So you will get data faster this way. And you can see that also here the gold forecast index is pointing upwards. So the recommendation is still to accumulate. Let's look at the leading indicators here. Also very important to watch. The latest data shows us that leading indicators are falling. So that's uh, telling us that the economy isn't doing that great. But when you look at the long-term chart, you see that this is actually bottoming out. So I think that there's a possibility that this leading indicator chart will go up next year. You can also see this here, OECD indicators are also pointing up. And that's because the Federal Reserve and the ECB are printing money. That's the only reason why there is still growth. Earnings were not moving up. OECD indicators were going down, but still pointing up now. I've also added a new chart here from the Fred side, the sum rule recession indicator. And this tells us that a recession is not arriving soon because recessions always come when this chart moves above the yellow line here, the yellow dashed line, and that is not happening at all. So I don't see a recession coming at the moment. So we have very slow growth, but we're still in a growth phase. We're not plunging like in 2008. Now, what has the Fed been doing? The Fed has been money printing. I call it the first gear here. First gear, then second gear, and now we are moving into third gear with the repo problems. So in September, the repo problem started, and then the Fed started to buy all these repos and also increasing its balance sheet. So you can see here that the money supply is going up. Also, base money will be moving higher, and that's good for gold in the long term. Then let's look at the balance sheet. You can see here that the balance sheet is increasing of the Federal Reserve, and also the ECB will be moving higher, and Japan is also moving higher. Repo problems are actually subsiding here. You can see it's topping out, um, which is also what happened somewhere here in 2008. Then it went back down. So I see that this will be going down again next year when the liquidity problems subside. So economy is doing well in some sectors. But when we look at, for example, the capacity utilization rate, it is actually going down. It has been moving to 76 here, 76.7, and that's a huge drop. Probably this will be going back up when the economy improves next year. But yeah, this tells me that capacity is not being used here in the United States, and also inflation will be subdued here. CPI will be will well, it will be staying at this same level here. Now we also have some trade deficit numbers. So this red line here is the trade deficit. And the latest number says that the trade deficit has actually been dropping. So we are seeing an improvement in the trade deficit. And that also tells me that the dollar is pretty strong. Okay. Whenever this happens, whenever this goes up, you have less trade deficits, the dollar will be strong. Well, the budget deficits are still going down, but we will see what happens here. This is important to watch. Another chart on the deficit to outlay ratio. We see that a lot of these deficits are still financed by foreigners, and this deficit, this high number of deficits to outlays means that we are still spending a lot of money that we don't have. Now, it is not moving up that much, so there's probably no recession here, but we are still at high levels. We need to see this coming down. I want to talk also about the misery index. Very interesting to know what this means. Misery index is the unemployment rate plus the inflation rate. Now, the misery index has been going down. Has never been this low even. So it is very, very low. And there is a correlation here. When this trend goes down, then the PE ratio goes up. So I've shown in the last chart that earnings were not going up. Okay, so that means that the price needs to be going up. PE ratio goes up, earnings are not going up, which means that the price of stocks is going up now due to higher valuations and not due to earnings. Also, the misery index is correlated to the gold price. So I see here a discrepancy here. Misery index going down, gold going up. This is not normal. So probably there's some things in the data here that are not correct. Probably the unemployment rate. Unemployment rate should actually be much higher and inflation also higher. And that would explain why we see this discrepancy here. Normally this blue line should be going up with the gold price. But we will see this. Let's see how this evolves. Okay, I want to talk also about what's happening in the Shanghai Futures Exchange. So this is a graph of the silver price and of the silver inventories in Shanghai as HFE, and you can see that they typically move up and down together, and we see here a huge discrepancy. So silver inventories are moving up while the silver price is not moving up. So either this will go down or the silver price needs to break out. And I think that probably the silver price will break out into next year. Um, Another evidence on this is because of the COMEX. This is the registered stock, and typically when registered stock goes down, then silver breaks out. So we had a breakout in 2016. When this went down, then silver went up. And now I am expecting the same here. If this goes down, then silver will shoot up. Also very interesting to watch is the registered silver from JP Morgan's warehouses. It has been flatlined for multiple years, 4 years, at this level, and apparently on 12 September it started to go down again. And this typically happens when the silver moves up. 2016 we got a huge increase in silver price, and I expect that this will happen again. Also, this one is a very interesting chart when we see high open interest, the blue line, then typically the gold price will move up after this discrepancy. So we will probably see this happen again going into next year. This is a chart from Incrementum, very interesting. You can see here the monetary base. I've showed that on the other charts here. This is what the Federal Reserve is doing here. It did QT here, and then now we are going back to QE. So this will be going up again, and this discrepancy here will be widening. So we are still in a very good place here to have higher gold prices move up to probably the 2000, 3000 level. And we see that they are going into first gear, second gear, third gear on the money supply. So this will be moving up for sure. Also, very nice post here. Jim Rogers has recently said that money is moving from Hong Kong to Singapore and Shenzhen due to all those protester riots. And well, we see that there are accounts being created in Singapore. Money is flowing into Singapore now, and that should be a very good place to invest in. And I recommend to buy, for example, Ascendas Real Estate Investment Trust, which is actually real estate in Singapore, and also in Australia, a bit in Australia and the UK, but mainly Singapore. He also says, of course, that Russia uh, is going up. That's also something that I kept saying, that you should buy Russian banks because they have very good earnings. The last thing that I want to talk about today is this chart from Marko Kolanovic. And this shows actually that central bank money printing, which is the yellow chart here, is actually a leading indicator with a 6-month lead on the manufacturing PMI. So we all know that everyone is going to print money into next year, at least until April next year. So we already know the future because the PMI will probably go up. And that also shows why the jobs report is so good, because the PMI is starting to move up due to all that money printing. Bond yields will also move up due to higher growth, and that is what is predicted here. So probably also the leading indicators will move up as well due to money printing. So on one hand, we have a deteriorating economy, and on the other hand, we have the Fed doing a balancing act here. Also the ECB and Japan. So yeah, that's actually the situation at this moment. The conclusion is that the gold forecast index is still positive, um, And I think we are seasonally in a very good month here, December going into January, February. So gold should be moving higher. Also what the gold forecaster index is telling us. Okay, we'll see if that happens, if this gold price will go up into next year. And I'll see you next month. Goodbye.